9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with Annabelle Droulers.
We're counting down to the open of markets in Greater China, and our top stories this morning: risk assets in the red as Amazon's AI spending plans and weak US jobs data spook investors. Chinese stocks also set for their biggest weekly drop since November.
HSBC prepares to slash and in some cases scrap bonuses for underperforming bankers. The details of that Bloomberg scoop coming up.
Meanwhile, weekend elections in focus with Japan set for a lower house vote. Latest polls putting Prime Minister Takaichi on track for a bigger majority.
And I'm Haslinda. I'm in Bangkok, where voters are also headed for the ballot boxes, facing more of the political instability that's turned Thailand into one of the region's economic laggards.
It feels a lot like Groundhog Day. You take a look when it comes to this tech sell-off, and once again, we've come full circle, and you're seeing it very much here in Asia with Korea, where you continue to see downside there. We've come off some of the initial 5% drop on the Kospi, but we're still talking about some pretty decent sell-off here to really end the week, and really that we're tracking on the first weekly loss for Korean stocks all year. So certainly that's one thing to watch here is, the spillover effects from this whole Anthropic story. You add the Amazon earnings and that huge capex number, I think we're still finding hard reasons to really kind of prevent this sell-off here right now.
Yeah, and I think it also becomes quite all-encompassing because it's not just stocks that are being hit, it's commodities, it's crypto. There's lots of different parts of the market that are really feeling this pain this morning. But yeah, to your point, Anthropic was the big story. We got another release on Anthropic, but for the foundation model, again, that's the financial services sector now that's perhaps getting rethought around those traditional models. So it's very, very broad-based. But I think, that Amazon number really stood out in terms of the overall capex plans for this year.
200 billion. And that follows what Alphabet came out with just a day ago. So certainly for investors, I think they're saying, the message is stop spending when it comes to AI, because you're seeing a very fierce reaction to it here right now. Yeah, continuing for another day.
And I think it'd be interesting to track as well that rotation trade, because we've been really talking about, the AI parts of the market were feeling the pain, but we were seeing that rally maybe broadening out and investors preferring areas like value, for instance, and the small, the mid caps. But what was interesting overnight in the session, you saw that broader retreat for the S&P 500. So that's very much the Mag 7 story. But actually, on an equal weighted basis, you also saw a drop from an all-time high.
Yeah, and crypto continues to be doing its own thing, but I think we're watching some key levels, right?
Yeah.
Obviously, when it comes to silver, that's also one thing to watch. If we hit 70, I think that certainly is that sort of cutoff, make or break sort of moment. But crypto markets are continuing to see a massive sell-off here. You talked about strategy and what's been going on there. That's just really kind of amplifying the concerns there too.
Yeah, certainly. Yeah, there's just that sort of DAT, digital asset treasury model that's very much under threat, and we saw that in Strategy's latest numbers. But let's just take a look at those market boards then, because as we said, it's really a lot of red this morning that you can see here. So the broader index is off 0.6%. You've still got S&P 500 futures that are in the red this morning as well. Where you are seeing some bigger moves really is still in that commodity space. You can see gold that's tracking down 3% there. Silver, likewise, as Yvonne was mentioning, we've really way off, like a third, in fact, of value has been lost since it touched an all-time high last week. So you're seeing, again, just under that 70 level for silver there already in the session. The Kospi, let's just take a quick check on that, because as Yvonne mentioned, would maybe have picked up a little bit from the lows of the day, but still where you're seeing a lot of that pain is in the big chip names, SK Hynix, Samsung as well. So it's that broader AI trade, of course. Foreign selling, a lot of foreign selling going on there. In fact, yesterday we saw foreign funds offloading $3.4 billion worth of Kospi shares, and that's the most ever we've seen on a single day basis. Crypto as well, because of course Bitcoin, as we said, tracking that level here. You were earlier down closer to that 60,000 mark, rather a little bit upside, but really just put it in the context. Bitcoin's now raised about half of its value since it reached a record high 4 months ago. And then how does it set us up for China this morning for trading? I think what was interesting overnight, actually the Golden Dragon Index, end of the day in the green. You can see there 9/10% to the upside. doesn't look like it's going to maybe translate over to Chinese equities this morning.
We'll see. It was interesting when you take a look at HS Tech yesterday, late in the session. We actually saw some last minute sort of buying that led to them reversing some of the losses and actually ended up in the green. So we'll see how that plays out. Southbound side of things, how flows are doing here today. But yes, it is a massive wave, though, across assets on what's really been going on, given some of this tech worries here as well. And let's talk about what led to it this time might be Amazon. We saw the shares take a canning in late trade after the company announced plans to spend that $200 billion we just mentioned this year on data centers, chips, and other equipment. And that's leaving investors worried that its AI bets may not pay off in the long run. Let's bring in our e-commerce reporter, Spencer Soper. He joins us from Seattle. Of course, he covers all things Amazon. Spencer, certainly the headline was the $200 billion in terms of CapEx. What else stood out to you in these earnings?
Yeah, I mean, that really was the big number. Everything else about the earnings print was pretty good. You know, they had a good fourth quarter, good holiday season. Their Amazon Web Services is growing. You know, their cloud computing division is growing quickly. But everything was overshadowed by this $200 billion capital expenditure number that they disclosed for the year. And it just really got investors questioning, how enthusiastic Amazon is with this spending.
Where do we go then from here? I mean, how much? I guess it seems like investors maybe have run out of patience a little bit. But what does the roadmap look for this year? And how can Amazon also convince investors this is the right way forward, aside from waiting, I guess, for more numbers from AWS?
Yeah, exactly. That's the thing. This is going to be, play out for months, right? And that's exactly what happened on the call. Analysts were really just trying to look for any kind of signal, begging CEO Andy Jassy, like, hey, you're real confident about this. Help us understand your confidence, and bring us along. And one of them even asked about guardrails. What kind of guardrails do you have to make sure you're not spending too much? And Jassy really didn't have an answer for that. And he basically just said, this is an extraordinary opportunity for us to forever change the size of AWS and Amazon as a whole. And he said, we're going to keep spending aggressively to maintain our leading position in cloud computing and artificial intelligence. So it is a bit of a standoff for now. And yeah, I mean, the proof will be in the pudding, with Amazon showing some better indications that this bet is paying off over time.
E-commerce is still the bread and butter of the business. So do you think that given we saw good numbers there and they're increasing automation, for instance, making some other changes, they had that strong holiday quarter, can the gains that we see there sort of offset, I guess, that spending, do you think, in 2026?
No, I mean, e-commerce is probably the bread of the business, but not necessarily the butter. The butter is still the cloud computing side. Okay. That's where that's where most of the profit comes. So it really all eyes are on cloud computing. We almost joke. It's almost like there's two Amazons, right? There's the Amazon that consumers know that they buy from regularly, order things online, and then there's the Amazon that investors know, and it's really increasingly just focused on cloud computing and the future of artificial intelligence. And as long as the e-commerce business is, operating within certain margins, it's really an afterthought for investors these days.
All right, I love that. Yeah, the bread, not the butter. Okay, that was Spencer Soper there, our Bloomberg reporter covering this company very closely. But let's also get Yvonne, I think, to the other story that was big overnight, because it was, yes, we had the Amazon numbers and investors were really looking closely at that. But the other thing they were watching really closely was this new release from Anthropic. Yeah,
this is different from what we saw earlier this week, which was the AI tools that can sort through legal documents. This is talking about financial research this time around. So I think it's almost become a proxy, this whole Anthropic story about, what can AI really disrupt and really maybe potentially really roil in terms of industries. And I think there's a lot of questions here on, what that is going to look like for some of these companies moving forward.
Yeah, that's right. I think, so this week was about updates to Claude Cowork. That was the legal side. That's the AI agent. And this is about Opus. And that's the foundation model, essentially, Claude Opus, but 4.6 being the latest iteration of that. And yes, to your point, just having those financial capabilities. And then you saw that again. I mean, this week it was really about those software plays getting hit. This is the financial services companies now that are feeling that pressure.
All right. Let's talk a little bit more about this and what this means for this part of the world, the EM equities and the like, and bring in Songja, Senior Investment Specialist at BNP Paribas Asset Management. Songja, it's great to have you on the program. How should I be looking at this sort of tech sell-off here? Do you think this is all very just AI specific, or does it spark some sort of derating in tech?
We think that in our outlook report to our client at the end of last year, we highlight that the sustainability of the U.S. AI rally would be the key risk to watch for this year. So we already tell our client, and we won't be surprised that if you look at the Korean market, we should not forget that the market went up almost double last year and by a third in the first month of this year. So we think the market may be go too fast, too far. And last week, even we observed some kind of like Korean domestic investors, they diversify into the Chinese equity stocks, looking for those kind of diversified AI story. I think China in this kind of context offer a kind of more broader AI story than the U.S. equity market.
Yeah, so the pain, I guess, that we're seeing in the US and Korea today, you think that we have sort of seen China being the counterweight to other markets in the past. Does that thing continue then for the foreseeable?
Yeah, maybe here we may offer some nuance for the AI story. So lots of, I believe no guys can walk out of this studio without talking about AI. But when we're talking about AI, when we're talking about AI story in U.S. equity market, is pursuing AGI through large language model. But China's AI story is slightly different from the US AI story. If you look at the AI is about data, model, and applications. And if we are talking about a large language model, I believe that 99.9% of the data on this planet, they don't speak in English. So which means that China not only looking at the pursuing AGI through large language model like DeepSeek, or Alibaba, they are doing the same thing. But we also have the company doing the self-driving car, human robot, and also industrial automation. And coupled with China's industrial complex and also power infrastructure, that makes the China's AI story much broader than the U.S. equity market can offer.
How should I look at? I know that the AI plays are very different in China versus you look at Korea, you look at Taiwan. They're very much in the center of the whole supply chain globally, right, when it comes to AI. How should I still look at markets like Korea and Taiwan? Do you think, they seem to be the most vulnerable to any sort of U.S. tech sell-off right now, but they should be beneficiaries of also AI capex spend. But they're also now fallen victim to what's been seeing in this rout. How should I look? Is there more pain to come, really, you still think, for Korea?
We still think that if you look at AI, for Korean and Taiwan markets, there's no alternative in semiconductor. If you talking about the memory, if you are talking about the advanced fab, there's no alternative in this market. So we are still optimistic about the Korean market and the Taiwan market. But I think currently it's just like a kind of very common de-risking of year-to-date very crowded trade. Even for Korean domestic investors, they may think that the market would be too crowded in the first month of the year.
But is this an attractive entry point, do you think, or what is the point where you actually think now's the time to buy in?
Yeah. So we kind of expect and embrace this risk in the market. So throughout the last month, we gradually increase our cash level in our portfolio. So we look for this opportunity to add to the names that we like in the market.
What about in terms of broadening out of the rally? We're seeing that in the U.S. a little bit. You're seeing that in China as well. This pivot from growth to value.
Yeah.
Are you believing in this value sort of trade right now? How sustainable do you think it could be?
I think the sector rotation normally hard to predict and late to chase and burned when you chase it.
Very quick rotation, in China.
So we would like to stick with those kind of growth and reasonable price names, even in the semis in Korea and Taiwan. We think those companies, their order visibility is very high, so we would like to stay with them.
Going back to China, what's your outlook then for this year? Because we've been talking about Hang Seng Tech Gauge, for instance, being very close to a 20% drawdown. Do you see Hong Kong still continuing to feel that pain? But yesterday we also had those southbound flows in really late trade and certainly lifted sentiment into the close. Yeah,
that's a very good question. So if you look at the China equity stock, we think the window for China equities is already open because we have seen clearly structural trends happening in this market. And regarding the Hang Seng Tech Index, if you look at the information technology sector within the MSCI, it's almost flat last month. But within our China equity portfolio, we went up by 8%. We think this stock pickers market instead of board market rally story.
Okay. Anything else? I mean, this is a pretty difficult trading environment, I think. We're not used to seeing moves like this, right? When Korea can be up and down like 5%. Where else are you seeing opportunities now beyond just, the longer term AI plays, as you mentioned here? I mean, I take a look at something like precious metals.
Yeah.
How does that translate in terms of equities, you think?
Yeah, for precious metals, we think that it's a very crowded trade year to date, and even like not only gold, silver, copper. So we think that kind of rally, some part of the rally is supported by the fundamental because of the capex of those kind of material companies, but some of the rally is purely like hype. People just like chasing the rally. So for us, we would like to stay with companies with visible earnings in the future instead of chasing those hypes. Yeah.
Okay.
Song, thanks very much for joining us. That was Songja, the Senior Investment Specialist, Asia ex-Japan and Emerging Market Equities at BNP Paribas Asset Management. And still ahead on the China show, we're going to be hearing exclusively from the CFO of Chinese pork producer Muyuan Foods. That says its stock debuts on the Hong Kong exchange after a $1.4 billion IPO. That's coming up at 9:30 a.m. if you're watching in Hong Kong this morning.
Yeah, and then we're seeing live pictures right now from the Hong Kong Stock Exchange where, Muyuan is set to take the stage there to, of course, bang the gong. And certainly that's going to be the one thing to watch here. I think there's a few of them today, so I think there's a few listings that we'll tell you about here coming up. This is The China Show. All right, here's your agenda today. I continue to track what's been going on, which, of course, is this tech sell-off. And, HS Tech, we are still, watching that whole bear market sort of territory there. And certainly we're heading off to one of the biggest weekly losses for the MSCI China, for HS Tech for this year. So certainly that's one thing to watch here today. Southbound flows, whether we do see that sort of support from the southbound flows here today is one key question. The fix, obviously, as well, just given the moves that we're seeing across FX. There's a CGB sale, and we're still tracking metals and crypto today.
Yeah, really busy day. And of course, Bloomberg as well, continuing to track these developments around Panama. And the latest on that is that we've learned that China's asking state firms to halt talks over new projects in the country. That's after a Panamanian court cancelled CK Hutchinson's contract to operate 2 ports along its strategic canal. Let's bring in our China correspondent, Min Min Lo. So, I guess it's a developing story, but what's the latest on this front?
Yeah, so the Chinese authorities, this is according to what sources are telling us, the Chinese authorities are now, number one, to your point, asking state-owned companies to halt any talks of new projects in Panama. That's one. But the other thing is that the Chinese customs is now going to step up inspections of Panamanian imports, including things like banana, coffee. And you can imagine this is possibly going to be a slippery slope, right? Possibly leading to investigations that could end up in tariffs. And the third thing is that they're asking state-owned companies, asking shipping companies to reroute their goods, their cargoes to other ports if it doesn't cost too much money. So a series of actions that they are taking after the Hong Kong and Macau Affairs Office had posted a notice on WeChat warning of the heavy prices that Panama has to pay if it doesn't reverse its course. So what did Panama do? It dug in its heels because the Panama president gave a press conference and basically said that the Panama government is going to respect the Supreme Court ruling and saying that unlike China, the executive branch of the government is not going to interfere with the judiciary, and that a country run by the Chinese Communist Party is going to be very different from the independent institutions of Panama. That's what he said. And he also denied that the government has been harassing and threatening CK Hutchison over the past year. So things are certainly heating up, and is handing that win to President Trump.
Yeah, and what is this impact going to have on Panama?
Yeah, it's going to be a little bit difficult to calculate the exact impact because it's not clear now when it comes to halting those projects, whether it applies to ongoing projects, because there are currently still a bunch of different projects, at least 3 different state-owned companies involved in infrastructure projects, including a 4th bridge over the canal, a segment of the metro station line, as well as a cruise terminal as well. Panama has already ended its Belt and Road Initiative sort of collaboration with China. So that indicates that it was already reluctant to continue these collaborations. And bear in mind as well, its largest trading and investment partner is the US and not China. So the impact there might be a little bit limited. But in terms of the potential investment that could be derailed, that still could be in billions of dollars. When it comes to the exports of agricultural goods, that's just a sliver of Panama's total exports. But there's no saying that China might expand the list of goods that it might want to investigate further down the line. So yes, we'll see how things pan out further down the road. And by the way, CK Hutchison is also starting this international arbitration process to sue for damages. And the Panama president said they are going to defend themselves in the arbitration process.
All right, Min. Thank you, Min Lo, there, our China correspondent, on the latest when it comes to this deal. We're checking when it comes to the pre-market in Hong Kong, and this is what it's looking like right now. We're down some 2%. So continuing on this sell-off on Friday. Although when you take a look at what's been going on with silver prices or Bitcoin, I mean, those have actually come off some of the initial moves to the downside. So things are actually looking better on some of these asset classes. You take a look at that, but we'll see how the China Open fares here right now. So we're down about 2% for Hang Seng. The futures are still very much in the red here this morning, and dollar China at 693 levels. That fix was pretty much in line here this morning. This is Bloomberg. All right, checking cross assets. So dollars catching a slight bid, but take a look at when it comes to silver and gold. Spot prices are at least, we're pairing some of the losses, so we're clawing back just a little bit, but we're still talking about 2% decline when it comes to spot prices here this morning. Bitcoin also recovering now, but yes, breaking below 65,000. That certainly was a threshold that the people were watching out for, and we are still staying around those levels right now.
Yeah, and I think you can also consider where we've come from just in the last few months. It was only not even a year ago that we were at 125,000. So it's a huge drawdown. But how we're setting up for the open here, because we're about 4 minutes away from the start of trading today, we're still looking like we're going to open in the red across the board, even though we actually saw lifting into the close yesterday and positive session for the Golden Dragon Index. One IPO as well to track very closely. This is Muyuan Foods. It is one of the world's biggest pig breeders and also pork producers.
Yep, that's one thing to watch here as well. We're going to be talking a little bit more about the IPO pipeline, and also when it comes to TMT and what the outlook for deals are going to be with Citi. They're joining us later on the show. But yes, the bang of the gongs, plural, here today. You're watching the China Show. The Open is next. This is Bloomberg.
Welcome back. You're watching the China Show this morning, and we're counting down to the open of markets. We are looking like we're going to join what's very much a regional sell-off, tracking what was in Wall Street overnight. Lots of fears around AI, lots of fears around CapEx spending in particular. It has been a pretty nasty week across the board for a lot of different assets.
I mean, the first week of February has been interesting. So was the first week of January, right? So I think, it certainly we're still dealing with the damage that's been left, but I think at least for now there's a bit of solace here that some of the swoons that we're seeing when it comes to crypto, in terms of silver and precious metals, at least we're taking a bit of a breather today, but we'll see if that holds here for the rest of the day.
Yeah, it's going to be really interesting to watch as well how China goes in the session, given we saw actually Hong Kong closing in the green yesterday a little bit, and didn't really translate to Golden Dragon either.
Yeah, and then we're still, we're clawing back, loss from the losses, but silver is still, below 70. Crypto is still below 65,000. So just keep that in mind, some of these key levels. And that's why perhaps you're still seeing stocks that are on offer here today. CSI 300 is down about 1%. And so, it doesn't seem like, even Korea and Taiwan has been not immune to all this, right? And these were all markets that up until now were almost like Teflon, right? And so, but at least even Kospi is coming coming off some of the initial lows of the session here today. So at least there's that. But the commodities continue to fall out of bed here. Take a look at what copper's doing. We're down some 4% in terms of the futures there. Shanghai crude is also down about 1%. We'll tell you what's going on with silver and gold. You know, we're still seeing in terms of some of the futures contracts are still quite pronounced, some of the moves to the downside. We're watching when it comes to tech. And once again, you see, you know, Cambricon Tech is down about 1% or so. Let's look at the boards and see how HS Tech is doing here. Obviously, we are tracking what looks to be one of the worst weekly losses for MSCI China and for HS Tech for all of this year since November. So that's really one thing to watch. There you go. HS Tech is down 2%. We just went sub 5,300 for that benchmark there. Hang Seng also at 26,400. So it is a sea of red here. Take a look at the tech space. Alibaba is down another 3%. Baidu, I mean, that was what kind of led to that sort of last afternoon session rally and the reversal that we saw at HS Tech. But even now, Baidu is lower by about 3%. Xiaomi as well. So even HSBC, I mean, this has been sort of like the financial darling among some of the old traditional sectors. That's also down some 2% there. I will tell you a little bit more about our scoop about bonuses and maybe the lack thereof for some of the bankers out there this year. Let's take a look when it comes to the miners and the like. I mean, just China silver, gold stocks, you know, that continues to be a down arrow story here as well. So you're still seeing some pronounced moves. As we were just talking to BNP Paribas Asset Management, Song Zhe about this. He says, look, don't, you know, it's all hype at this moment. These are not really sort of, you know, long-term sort of bets that you can make when it comes to precious metals and the like here right now. So, you know, they're sitting out on this one here. Gold spot, as we talked about, we're still seeing downside about 1%. So Jiao mining there, Zijing mining, I should say, is lower by about 5% there. Take a look when it comes to crypto as well. I mean, basically, you know, pick your asset class, and you are still seeing that downside, right? And you're watching some of these crypto stocks really following what we saw with the Bitcoin price overnight. Although we stabilized now around 64,000 something, you know, still seeing the likes of Huobi Tech down some 5%. But there are still some listing debuts, and they still are bucking the trend right now, right? So we have Muyuan Foods, Distinct Healthcare, and Shenzhen Han's CNC. There you go. All in the green here. Distinct Healthcare, we're going to be talking to them coming up in the next hour as well. Private healthcare and the like, we're watching that very closely. We're up some 25%. But yeah, the healthcare sector is still looking pretty good right now, Belle.
Yeah, and we've sort of seen that big focus on the consumer angle anyway in China over the past few sessions. That's been sort of one of the standout areas. But I was a little nervous for these companies with their trading debuts today, and it seems like so far they're really seeming to buck that broader malaise that we're seeing in the markets. What is interesting as well is really, I guess, all of the bankers that are lining up for a share in the IPO pipeline as well. And that's been another big story this week. We had a great opinion piece out from Shuli Ren as well, just talking about sort of the rush to capitalize on this sort of frenzy that we see, but not necessarily going to be translating to bonuses, it seems.
Yeah, I mean, at least for HSBC, right? This is our scoop that came out, and really kudos to our team for writing it up. But basically, they're saying that they're preparing to hand some bankers little to zero bonuses this year, as of course they go through this massive restructuring. So it's sort of this sort of eat what you kill stance. And really, it's interesting, right? Because the rest of the U.S. banks are actually pushing for a boost in terms of pay, right? We saw UBS, we're dialing up, I think, bonuses by about 20%. There's been U.S. banks in Europe trying to also boost pay and the like. But HSBC is going the opposite direction. And I think it just goes to the vision behind the CEO right now.
Yeah, that's right. George El-Hedri, he's been in the position since 2024, the second half of 2024. And in that time, he's been pretty ambitious in the way that he's trying to go about this restructuring. So he's shuttered, for instance, different divisions like the deals, the equity underwriting operations in the US and the UK, continental Europe. He's combined the commercial and investment banking units. So there has already been sort of an exit of a lot of long-standing veteran executives. But now it seems like he's really focused on, are you performing? And do we need to pay you extra for that performance?
And if you're not performing, you know, we're just going to push the laggards out, right? I think that's sort of the sort of mentality that we're seeing here, given this scoop. But, you know, for investors, I think they're rewarding some of the efforts that we're seeing from El-Hedri, right? You take a look at the share price of HSBC, it's almost doubled since he was promoted to the CEO since September 2024. So certainly HSBC, as we mentioned, has been a bit of a darling here against this sort of tech sell-off and the like. But there you go, 1 year chart. There you go, 66% upside for 5HK. In terms of what else we're watching cross assets, it's still going to be the precious metals, it's still the crypto space, it's still the tech sell-off there. And mind you, yes, we've seen some coming off of at least some of the gold spot prices and silver spot prices, but silver futures are still down some 8% here right now. So volatility is still the name of the game here. This is Bloomberg.
One of Singapore's biggest ever M&A deals was agreed this week, and it's expected to close in the first half of this year. This is a KKR-led consortium that's going to be acquiring data center operator STT GDC for $5.2 billion. Citi acted as the lead financial advisor on the transaction, and for more, let's bring in their co-head of Asia Technology and Communications, Ho-Yin Lee. So, Ho-Yin, great to see you again in the studio. Let's just talk about, I guess, yeah, that's a big deal. I know you can't comment on it directly, but what does it tell you around the broader M&A activity and this sort of, I guess, these transactions or these types of transactions we're seeing right now?
Yeah, first, thanks so much for having me. We're really excited. Look, AI is a big theme, clearly, and we can talk more about that. Underlying a lot of this is the infrastructure, right? The infrastructure includes data centers, it includes powers, it includes other components, but data centers is clearly a key part of that. And what we're seeing is a massive amount of private capital and public capital where possible really look to invest in the space. And I think that we've seen a lot of activity in the last 24, 36 months globally. It's really picked up here in Asia, and we're pretty excited about the next 1 to 2 years in the space.
Public markets, I mean, we're getting worried about all this AI, investments here, that maybe the monetization side of things is not quite clear yet. I mean, has that in any way led to any sort of impact on the deal flow that you're seeing at all?
No impact. I think, look, investors are looking longer term. What I think is really interesting is that we present a lot to boards, we present to CEOs, and AI has been the major theme. One of the things I like to do at the beginning of these presentations, especially when it's a group, is ask how many people feel like they've truly embraced AI. And interestingly, it's only a smattering of hands that ever come up. It's a few people in the room.
Yeah.
And it really just shows that we're at the beginning of the AI revolution, right? We're not using it enough in corporates. We're not using it enough personally. And we're pretty excited that I think this year we're going to see a rollout of a lot of different new applications.
So what does the year then look like for you? What's your sort of expectations around how busy you're going to be essentially? Because to Yvonne's point, if there are these concerns around essentially how disruptive AI is going to be now, and you don't see that playing out, what is your expectation then?
Yeah, I think on two fronts. So first, in M&A, we had a record year last year. We're pretty positive about this year. We're seeing a lot of activity. We're having dialogue across the region. And all corporates are keen to see what they can do.
So you think you can beat last year then?
We'd like to. We'd like to. On the equity side and the fundraising side in general, that's also been extremely active, right? Convertible bonds has been very busy. In the first few weeks of this year, so since January 1st, we've actually seen the equivalent of 25% of volumes versus last year already. And so there's a real pickup in activity. We've done 3 equity deals this week. And so, look, we're excited, we're positive. There is some market choppiness, but look, we're looking for a longer period of time.
Yeah, how much of that is happening in China right now? I mean, we talk about all these massive sort of AI companies that are listing, onshore and offshore. How busy are you in the China market these days?
The China market is busy. The 3 placements, the 3 equity deals I talked about are all Chinese related.
Yeah.
And so, look, the market is extremely active. We're seeing a long line of companies looking to list here in Hong Kong. We're seeing a lot of companies looking to raise overseas capital. That's to grow their operations overseas. That's to fund potentially M&A. And so everyone's looking to, get out and do more.
On the M&A side, what do the valuations, what does the deal size look like? Do you see that changing at all or being tested a little bit?
Bigger deals. We're aiming for bigger deals. Right? I think what you'll see, and this is globally, right? There's a lot of mega deals happening. There's a lot of multi-billion dollar deals in the works. I think the one you referenced is a good example of that. And so we do think that corporates are looking to do big things this year, particularly given all the change that's happening in the world.
We had a few weeks ago had a report about, Hong Kong has been in some ways concerned about the quality of some of these deals that are happening, right, from China, whether it's applications that are not complete, they've been done with AI. I mean, have you seen any signs of regulators trying to tighten some of the listing requirements for some of these companies now?
Yeah, we've seen some steps, but look, the importance is that we stay compliant, we make sure that we're in line with the rules, and so look, transparency and good quality reporting is good for everyone.
Do you think it changes or impacts at all the pipeline in any way for you?
No, look, the pipeline is extremely big.
Yeah.
The focus is clearly bringing good quality companies to market.
But given the amount of competition as well in this area, on the underwriting side, do you have to also be more selective about the types of companies that you go after?
Yeah, look, some of the themes, so investors really like themes tied to AI, right? And this is multiple layers of the stack. We talked about infrastructure, right? That is one piece, but there's also semiconductors, there are cloud providers, there are software companies, there are applications as well. There's actually a lot of different ways to play it. And I think what you've seen in the market over the last few weeks is the level of enthusiasm across the different layers of the stack. We're going to see more companies around robotics, automation, right? Autonomous everything. These are all themes that investors will really like, and we're keen to work with these companies.
We were talking to a lot of guests on the shows about some of the names that do list, in China are not household names, right? That there still needs to be enough, due diligence and research to really kind of, research on these companies in some ways. In terms of global national, foreign participation and interest in these sort of companies, what are you seeing in terms of from global investors right now?
Interest is returning, right? Over the course of the last 12 months, we have taken a lot of companies overseas. This is to US, to Europe, even to the Middle East, to talk to investors. And the level of engagement, the level of specific questions that investors have on the companies, what they're doing, competitive environment, is really high. And so that level of interest is there. We've seen in the recent deals that we've done as well, participation from global funds.
And again, let's just talk about then the outlook. Is there anything that's going to test you're just very positive, that's all, and it's just an interesting moment given the fears that we've seen in the market around, again, going back to AI, back to valuations, back to spending plans. Is there anything that you think about in the next few months that could test your conviction in the trend at all?
Yeah, look, it's really around the speed of adoption. I think when I was on last year, we talked about AI as well, right? That's still the major theme. I'd say things could pick up quicker, right? We can all adopt the tools more quickly. We at Citi have a stylus tool, which we're all using. It's been rolled out in Hong Kong. But we could do more with these tools. Enterprises can do more, and that's really what's going to help with the pace of adoption and growth for the sector.
I'm wondering how trade tensions and the like, right? There's still a lot of uncertainties around chips and tariffs there, and really geopolitics has certainly been something that's been very much in the forefront of investors' minds. Do any of those things, do you think, impact sentiment at all?
Companies are very adaptable, right? There's been a lot of different news flow over the last 12 months, but this is nothing new, right? Companies have adapted. I think as we look forward to 2026, 2027, a lot of them have different growth plans, right? Whether it's in China or overseas. And so while there will be different news flow, I think companies are quick to adapt.
All right, Ho-Yin, it's great to have you. Ho-Yin Lee there, Asia co-head of Technology and Communications Investment Banking at Citi. Now, a reminder of our new online feature as well, which is our Bloomberg Video Hub. Make sure to check it out. Subscribers, you can explore live streaming, news and interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. You can check it out on Bloomberg.com/videos. This is Bloomberg. All right, one of the listing debuts here in Hong Kong today is Muyuan Foods, seeing a pretty slow start here for the shares. We're down up about 1/3% here, but after raising about $1.4 billion, we spoke exclusively to the CFO, Tong, about their business outlook and plans for overseas expansion.
I think in the next 3 to 5 years, we are focusing our overseas expansion on just in Southeast Asia. In 2024, we start our business, our first step in Vietnam. In the past 12 months, we helped our local partner, BAF, rebuild their biosecurity system just to prevent African swine fever. And now at the end of last year, we really make great progress in their performance. So now we have really strong confidence just to replicate our successful model locally in Vietnam. And now we are still seeking for the opportunities in the market like the Philippines.
I'm wondering what is behind this push to expand overseas at this time. Do you see a limit to how much your company can grow domestically in China now because it's so saturated and there is a surplus in the market?
I think the first one is we really have a big big market share in Chinese market. And the second reason is we see just now so many countries, and in these countries, their swine industry just suffer from the disease like African swine fever and the other disease. We want to improve the level of this country's industry and just promote our new technical plan and equipment here.
I want to talk about the domestic market because we know that pork prices has been declining in China since late 2024. What is your forecast for pork prices this year?
We all know that China has the largest consumption market for pork product. In the past, the Chinese domestic hog prices are generally driven by supply and demand. And the prices also move in the typical 4-year cycle. We also call it the peak cycle. And let's looking at last year, 2025, the hog prices is in a continuous downward cycle just from the beginning of the year to the end of the year. And now we can see the number of breeding sows also decreased a lot. So all this indicate that in the second half of this year, 2026, the price will recover in the second half.
I was looking at your earnings report and I found that in quarter 3, your revenue was down by 11%.
Yeah.
And I think the street consensus now is that your quarter 4 revenue is probably going to take a double-digit hit as well. So what are the levers that you are managing to control cost and manage your profitability?
I think from 2024, we concentrate on our strategy to reduce the cost and cut our total average cost. And in June 2022, we set a target, our internal target, to reduce cost by 600 yuan per pig. And in these 3 years, we achieved more than 300 yuan per pig. So now we still have around 200 yuan per pig.
So we know the Chinese government had urged the sector to cut pork production last year because of the surplus in the market. Many analysts are expecting the same call from the government this year. What is your company's target for cutting production, and how are you going to juggle that with maintaining your market share and your profitability?
First, we will keep our number of breeding sows just at the 3.23 million sows in our company. And the second one, we will keep our sale weight of commercial hogs at 120 kilograms. And in the future, we will accelerate our applications or some innovation applications in our breeding and also nutrition, and also in biosecurity system, and even in AI tool, some intelligent devices in our pig farm, and then improve our production efficiency, achieve the lowest our target cost goal.
That was the Muyuan Food CFO, Tong, speaking exclusively to our China correspondent, Min Lo, in Hong Kong. And another company, of course, that's just made its debut in Hong Kong is Distinct Healthcare. We're going to be speaking exclusively, again, another exclusive with its founder and CEO in the next hour to find out exactly how they plan to use the listing proceeds from that. But let's also take a look at markets here as we head into the first half of trading, or the first half an hour of trading, I should say, for Chinese equities this morning, but cross assets as well we're continuing to track, because you've got Bitcoin just going back above that 65,000 level, but still extremely volatile asset class. And you're seeing a little bit of strength come out of the dollar here, now trading flat. Silver is really where we've seen quite a significant capitulation, but around that 70 level. And also, of course, having a bearing on those Asian silver-related stocks today too.
Yeah, I think what did Tommy Ta say this week from Fidelity? It's gold. Silver is gold on steroids, and we're still not. It's still sort of like catching a falling knife. Although that knife is not as, I guess, sharp today, given that we've already bounced back on some of the initial sort of lows. Things have started, I wouldn't say stabilized. Take a look at some of these silver stocks. It is still like catching a falling knife at the moment. We're still trying to find a floor, really, and whether how sustainable that floor is still the key question. HS Tech, you take a look at when it comes, most, are in the red, except the EV sector, which has been interesting because EV has actually, they actually underperformed for much of this year. But really, NIO came out with some interesting earnings that came through here overnight. So they're following the ADRs and we're higher about 5% here. But the rest of the tech complex deep in the red here today, with Alibaba down 3.5%. We'll have a lot more on the way in the next hour of the China Show. Keep it here. Welcome back to the China Show. Here's a look at HSI, half hour into the session, and we're still sort of deep in the red here right now. We're down close to 2%. H shares are also down more than 1% here this morning. We're talking about how we are racking up to be one of the worst weeks for HS Tech and MSCI China of all of this year, right? So certainly this is going to be one thing to watch. Korea is already talking about the worst week, of 2026 for them as well. So when it comes to cross assets, I think it's all kind of like, I don't know, where to next, because we still can't quite find a sustainable floor.
Yeah, and a sustainable narrative, I guess, as well, because a lot of the fears this week have been around not so much about AI bubbles, but it's more about the application of AI and the types of industries that's going to be hitting. And we've seen it, for instance, with Anthropic this week. They have the legal tools, for instance, with the AI agent, but then overnight it was also released to its foundation model, Opus, and that was more targeted at the financial services sector. So it's very sort of broad-based and a lot of uncertainty that's really being felt. So Hang Seng Tech, I think it's going to be really interesting to watch, because we've been tracking that risk of a 20% drawdown. We haven't seen it close at that level just yet. The Kospi as well. I mean, at one point today, 5% in the red, and certainly big losses for SK Hynix and Samsung, the heavyweight on that index. The Nikkei trading a little bit more ground, but of course we're looking ahead to the election coming up this weekend, and does that inject further instability? In terms of those actual movers, as we said, it's very much that tech story, and particularly in Korea, you can see those movers there. Cross assets, as Yvonne said, it's very much that watch on gold, and huge drawdown in silver, which you're about to get to with Andrew James, our reporter, but very much, that 70 level there to track. Bitcoin, I think, is interesting because we tracked back down to 60,000. We seem to have found maybe this support at 65,000. How strong is that support, though? I do kind of question as well, after we had those Michael Strategy Inc. earnings as well overnight that certainly test that DAT model, and we've seen valuations really collapse for those types of treasuries. And then lastly as well, we can't go past Indonesia this morning, because just another pain point for the Indonesian economy is what Moody's has said now. So lots of concerns essentially around the credit outlook there. So
they've cut the rating outlook. So it's not a flat out downgrade yet, but certainly that is going to be the risk moving forward here. And it's almost like a double whammy for Indonesia after what we heard from MSCI and now also from Moody's. So they talked about really policy choices under scrutiny, just given the uncertainty we've seen, the weakening governance under President Prabowo's administration. That is what Moody's is citing here on the lowered credit outlook for the countries. So that certainly is going to be a key focus here. You're already seeing the JCI down another 2% here. Rupiah, that's the one to watch. Some analysts say we could be heading to 17,000 for Rupiah if these concerns continue through. We're at 16,865 here right now. Let's get a sense of how markets are faring with our team. Managing editor for Asia Equities, Lan-Ting Tu, joins us from Singapore, along with our crypto reporter, Subhashri Ghosh. It's great to have you. Lan-Ting, I'll start with you. It seems like we're starting to see a little bit of a maybe dip buying, or what is it? But things seem to be stabilizing. What is your team watching out for here now?
Yeah, it did stabilize if you look at the Kospi. I would say what we found out that is new today is overall the selling in AI and tech stocks is just becoming a little bit of indiscriminate, right? We've been touting how Asia has been a bit resilient because Asia Tech is sitting in the supply chain where they receive the spending from hyperscalers. But noticeably, we see people are actually selling Korea today and yesterday. Seems to be profit-taking from a market that has done so well and maybe finding some margin calls in asset classes, as you guys mentioned, in silver, even in gold, in Bitcoin, the places where they suffer huge losses. So Korea now is becoming a bit of funding source. We saw record foreign selling yesterday, and today foreign selling is also pretty big. And retail investors on the other side are actually buying the dip today.
Yeah, that's an interesting move. But let's pick up on that crypto angle, as you mentioned there, that selling we've seen in Bitcoin in particular. Suva, we do actually see it sort of maybe finding a floor at 65,000, or you think we can actually go a leg lower here again? What's your sense of the outlook?
What I understand, Annabelle, is basically the market is quite choppy, and frankly, traders are quite confused of what exactly they want to do. That is a sense I'm getting from people from people I'm talking to. For example, in the morning today in Asia hours, we saw Bitcoin almost touch $60,000, just $30 shy of it, and then we are back about at over $65,000, which clearly shows that the sentiment is pretty fragile and choppy. What we are looking at basically is kind of cues like more digital asset treasuries, the token hoarders, basically, if they come and start selling, like we saw from the yesterday's strategy, the largest Bitcoin hoarders results, that there's a $12.3 billion loss on their books because of mark-to-market concerns, mark-to-market losses, basically. So if that kind of losses pile up, then that could lead to a downward spiral, and it might not be a floor. To be honest, it doesn't look like to be a floor as so far, given the kind of sentiment we are seeing in the market is quite fragile, and people are really not very sure which way to go to, which side they will take. There is not much of dip buying happening. There is not much of capital. Capital protection is basically the key trigger for people instead of dip buying.
Okay, no dip buying. Interesting. Andrew, I want to bring Andrew James, and he's been tracking, of course, all things commodities. Have we found a floor when it comes to silver and gold yet, Andrew?
Well, I think silver is where we definitely haven't found a floor. It's just been extremely volatile, highest levels of volatility since 1980. Basically, the huge run-up last month, it sort of broke through of fundamentals. There was a lot of speculative trading in China, and it's now, the market's not really coping. It's not a large liquid market. There's a lack of liquidity. We're seeing very sudden price moves.
We seem to have lost Andrew's audio there, but we will get more details on exactly what's happening with silver ahead. I think what he was just saying, though, is essentially we haven't seen the worst of the pressure for silver in particular just yet. But that was our Bloomberg team there, Lan-Ting Tu, Suva Ghosh, and also Andrew James joining us for a bit of a cross-asset check this morning as we head through the morning session in Asia. Coming up, we'll have voters in Japan and Thailand gearing up for general elections this weekend. Investors betting on a big win for Prime Minister Takaichi, but the path, of course, in Bangkok looking a little bit less clear. We'll get analysis on the challenges facing both countries later this hour. More ahead. This is Bloomberg.
All right, continue to watch the fallout that is Indonesia, and certainly what we heard the news overnight, and really what the news dominates today is, of course, that Moody's downgrade in terms of the outlook, right? So they're talking about policy uncertainty and policy choices and the like, and really kind of adds to what we've been seeing and hearing from MSCI all this week. The Indonesia Financial Services Authority says it will continue working to strengthen the country's financial sector on the back of that Moody's announcement, right? So now outlook is now downgraded to negative. So they're citing concerns about policy stability. Let's bring in Jason Pang, Asia Fixed Income Portfolio Manager at JPMorgan Asset Management. I mean, I'm sure you're fielding a lot of calls about Indonesia these days, but is a downgrade risk, is that a real risk now, you think, for Indonesia?
So I think the starting point here to remember is on an ongoing basis, compared to sort of previous fiscal, we've continued to see an incremental increase in fiscal expansion. So I think that's been driving some concerns in the market, and that's been reflecting, as you know, into some FX weakness or bond weakness. But I think just to remember here is that, first of all, negative outlook doesn't mean it's an immediate downgrade.
Right.
There is time, and much like the MSCI index review, there is time, right? So I think the message here is that there's a degree of concern, not only that's been just in fiscal, but of course then that's now sort of evolved more into the governance side of things, right? But again, if there's time and there's time that's proven can be fixed, then I think it should be fine. And I think one of the things that, even though we've seen a lot of volatility, it does come with value creation. And if you look at foreign reserves in Indonesia as an example, foreign reserves are actually quite high compared to sort of its previous history. So the way that I consider it is, yes, there's asset vol, but I'm not sure that it qualifies as sort of like a fragile five type of scenario at this juncture. But indeed, there's negative concern, I guess, in the near term by the markets.
And what would sort of dissipate that negative concern, do you think? Because I think on the aspect of the more of the financial market side, we saw that immediate reaction from regulators. Maybe the governance side might be a little bit more challenging.
I think governance takes time. It's a form of, investor confidence, if you will. And yes, I mean, that will, show investors, what you mean by a governance improvement, right? That will probably be coming in a form of, for example, is the MSCI index changes on track, right? Mm-hmm. Is there signs of confidence from the equity side? Is there signs of confidence from the bond investor side? Is fiscal improving or being kept within sort of the 3% GDP cap? Or is it really going to move incrementally higher? I think those are the signs that investors are looking forward to. For what it's worth in terms of positioning, we're still comfortable with the Indonesia external debt. As I said before, foreign percentage is quite low, both in bonds and equities at this juncture. So repayment capacity is high if you compare it to foreign reserves. For the FX, then, we are indeed a bit underweight because the near-term fiscal and this sort of news will probably lead to some volatility. And likewise, we're quite neutral on the Indonesia local government bonds at this juncture.
There's been sort of part of that, I guess, the weakness in the rupiah. I mean, the dollar strength has come back in a I guess, moderate way, I would say. What's your dollar view now when you look at things? Because it seems like things have shifted a bit since Kevin Warsh was named the next Fed chair.
So I think overall in terms of the DXY, we are seeing a degree of, I guess, near-term tactical strength. But structurally speaking, we do believe that the case for some degree of asset allocation in non-dollars is still something that I think investors should have. So I think if you look at a broader term, the way that we've messaged it or considered it is that in terms of de-dollarization or, debasement or whatever theme that you want to call it, I think from an investor portfolio perspective, it's worth to at least have maybe 10 to 20% of your book invested into non-dollars, such as Asian currencies, which as you probably see, renminbi is doing really well. Malaysia ringgit's actually been performing, top notch compared to even Latin American currencies. So there are bright spots within the region, I think.
You're also overweight on the Thai baht rates. What's behind that?
So I think if you look at Thai rates, they've actually sold off quite immensely. I know by standards it's a very low-yielding market, but I think within its own volatility metrics, it's actually been selling off quite a bit. The curve has been steepening as well into the Feb 8 elections. Obviously, within that, then there's concerns on fiscal, and that's why the curve has been steepening quite a lot. But I think overall, if you look at the longer-term dynamics, and we saw that with the inflation numbers yesterday, right? I mean, it remains in a more deflationary pattern. So I think the message here is even though there's value creation, It's not entirely clear to me that there's a change in monetary policy, right? So I think into that, you need to sort of buy into that value creation on Thai GBs, and hence we are overweight the Thai government local bonds.
What is your view on inflation this year? I mean, there's some like BlackRock, PIMCO, they're talking about, there might be a risk of a U.S.-led inflationary boom that is really being underappreciated in this market here right now. Should I start looking at inflation-protected sort of bonds? I mean, I'm just wondering, how are you looking at that this year?
I think on and off we have been discussing whether TIPS warrant a position within our own portfolios within the region. I think, at least from where we see it, the indicators that we're looking at, for example, in the case of China PPI, and I think we touched upon this last time, we're seeing it still being absolute negative, but actually if you look at it, it's actually rebounding. ASEAN CPIs, aside from Thailand, if you look at other countries within the region, they are rebounding as well. So I think dialing that into the U.S. side of things, again, is, and if you look at memory prices, that has gone up quite a lot. So I think, how does that feed into the system is, I think, my question. But I think if you see the price increases in smartphones, right, or even smart fridges and other types of electronics, I think that will feed into some form of inflation. I wouldn't call it hyperinflation today. But I think that nonetheless, that's why we're discussing whether TIPS warrant a position in our book. But we're still looking at it, to be honest,
Yeah, it has been an interesting week, I guess, with that RBA rate hike, for instance, in Australia. Just sort of that question, is that a precursor of what's to come? You mentioned the market in China. What's your thinking around CGBs, and do you see any sort of significant rises as being likely?
So I think in terms of the CGB market, it's been quite range-bound, to be very honest. It's not very carry-centric in sort of the way that we view the book. So I think the positioning overall for us structurally for now is a bit more neutral. There's no good reason to have a massive increase in rates, right? We're not seeing massive equity outperformance at this juncture, given what's been happening over the past few days. So I think overall, on the lower bound side, then again, there's no room or big measures here to ease policy massively either, right? So I think rates is a standstill. But what's probably more interesting, if you ask me, is that the renminbi has been actually doing quite well. And if you look at it, it's been decorrelating from DXY and Euro. So look at the CNY fixes every day. It's been incrementally moving stronger over time. And I think last time when we spoke, maybe it was above 7. We're actually at below 695 now. So I think we are quite constructive on the renminbi. We have been engaged in this currency pair. And we think that maybe 685 is probably where we should be over time.
685. Okay. As Belle mentioned, the RBA, I was going to circle back to the RBA and what we heard this week. Where does it tell you about where central banks now in terms of this cycle? I mean, are we starting to see that now we're past sort of the easing cycles of most central banks in the region now?
Yes, we have been using that as a base case since our last quarter, based on the sort of PPI, CPI stuff that we talked about in the dynamics there. So we are underweight or paid rates in some of the selective markets that you mentioned. I think pertinent to this within the Asia region, again, we are paid rates on Malaysia in particular. So if we sort of see the monetary cycle, the one that is at least neutral or has a chance to be more hawkish is probably Malaysia to start. Whereas I guess, as we discussed, Thailand is sort of in a different scenario.
Okay, I got to ask you about Japan. I know it's not typically your coverage, but given that there's an election this week, it seems like the trade has been to buy stocks, you can sell JGBs, and you sell the yen. Are we likely to see more of that bear steepening in the curve?
So I think the curve has indeed steepened quite a lot given the ongoing fiscal concerns. I think likewise, if you look at CPI versus JGB 10-year, I mean, it's not very clear to me that the current state has lots of value in the bond curve. So I think the way that we've positioned globally, in a global bond funds and whatnot, is basically we are maybe a bit more underweight the 1 to 5 years or the 5 year, but not really overweight the rest of the curve. So I think the message here is we are more positioned for a potential steepening still. And likewise, then, if there's enough value creation, we'll look into it. But as I said, 2.1% CPI, we probably need a bit more than where it is today.
Okay.
Jason, great to see you again. That was Jason Pang there, Asia Fixed Income Portfolio Manager at JPMorgan Asset Management. And leaving you here with a look at markets, we are about 45 minutes into the trading session so far for China this morning, Hong Kong as well. And you are just seeing sentiment. We're still in the red, but we are off the lows of the day so far. So I guess you could just say a lot of fragility, essentially, to end the week. But more ahead, this is Bloomberg.
All right, that potential deal to combine Rio Tinto and Glencore into the world's biggest mining company, well, it's collapsed with talks going down to the wire, but ultimately falling short. Let's bring in our metals and mining reporter, Paul Hunt. He joins us now. I mean, Paul, these two companies have had talks before, but it seemed like this broke down pretty quickly. What happened?
Well, that's right. Discussions between Glencore and Rio Tinto have been going on for about a decade or more. What happened this time was Rio was very seriously looking at Glencore, perhaps for the first time in recent history, actively pursuing Glencore. However, couldn't get it over the line. Glencore wanted, according to our sources, around about 40% of the combined company, keeping in mind that the combined company would have had a market cap of over $250 billion. So this would have created the biggest mining company in the world. Talks broke down. We broke the news overnight from our London bureau, of course, which was quickly followed by confirmation from Rio Tinto and Glencore that discussions had failed. The crux of it goes down to valuation. We live in very interesting times in the mining world where mining majors are struggling with capital expenditure. They don't want to overpay, but at the same time, they've got empty shelves of projects because they've underinvested in growth for more than a decade. So at the heart of it was valuation. There were also some concerns over who would chair the combined entity and who would manage the combined entity, and they couldn't come to an agreement on that either.
So just given those sort of industry challenges and company-specific challenges as well, where does this now leave Rio and Glencore, and do they look to re-engage in any capacity, or you think it's just completely over for now?
Well, under UK takeover law, Rio has to step away for at least 6 months. They can't return in that period unless there's an interloper or a few other things occur. However, from talking to shareholders today, many Australian shareholders are actually glad that Rio has maintained capital discipline. Rio comes out of this, largely unscathed, but at the same time, you look at its growth portfolio, the projects that it wants to pursue in copper, the red metal that is key to electrification, that is key to tech industries. That's where Rio sees growth. So does its peers like BHP. Where will it find that growth? That remains to be seen. Will it make takeover bids for other companies? That's also an opportunity for it. I think perhaps this is more detrimental for Glencore, in my opinion at least, because that company has underperformed operationally for some time. So what does this mean for Glencore? What does it mean for its CEO, Gary Nagle? Does he go somewhere else? Or how does it clean up its act and provide shareholder value? Its share price crashed 11% once it confirmed that talks were off. There's several questions that remain over Glencore.
That's a really interesting reporter there. That was our metals and mining reporter, Paul Hunt, joining us. And some other corporate news this morning. Bloomberg's been told that HSBC is preparing to reduce or withhold annual bonuses for some bankers, adopting a more cutthroat stance on costs. Sources say the lender is also encouraging underperformers to depart following the bonus payouts in the coming weeks. This will include staff at managing partner levels. The move aligns with CEO George El-Hedry's goal to bring HSBC more in line with pay practices at US peers. OpenAI is rolling out a new platform called Frontier, designed to help companies deploy AI agents more easily. The company says Frontier aims to simplify how businesses roll out AI and accelerate adoption among corporate customers. The tool will also allow firms to integrate AI agents from rival firms, including Anthropic.
All right, we're checking when it comes to movers. It's still the software side of things that are still looking soft here this morning. So some of these Asia software stocks like OBIC, for example, is down another 3% here today. That certainly was the key sort of risk this week, was the Anthropic model and really what this means for software and the old industry, really. But yes, that is still a down arrow story. China EVs, I guess you're looking for bright spots across the tech space. In HS Tech, this is probably the place to be at. But although we have a great story that talks about BYD and just the wipeout we've seen in those shares as well. But today, at least, we're seeing some green. NIO seems to be the one that led that here, just given the earnings that we got overnight. So we're seeing 4% gains for NIO. But HS Tech, as you can see there, we're still lower by about 1% here today. And why not talk about some condiments to wrap up this crazy week? Ajinomoto, they talked about profit forecast boost there, so the shares are up some 10%. But yes, the battle of the soy sauces there you're seeing there play out. Yeah, this is a really interesting one. So Kikkoman shares, you can see, are down quite substantially. Actually, that's the most going back to around April, or the worst of this year, or last year rather. But essentially, a slowdown in soy sauce sales in the US. So we saw a drop in revenue of 1.6% year on year in the third quarter, and Citi saying that was a surprising decline. So, yeah, head scratcher that one. More ahead. 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break. And yeah, actually, Japan is bucking the trend here today. We continue to see equities are bid up here as we count down to that election in the lower house on Sunday. So there is still that Takaichi trade that's still being priced into these markets here right now. Dollar yen is strengthening just a bit here, but at 156 levels. But, there have been some analysts saying, if it's an outright majority win for Takaichi, for the LDP, watch dollar yen go back to 160, and then that really leads to maybe it's that intervention risk once again. JGBs, though, are bid up here. We're lower by about 2 basis points, 221 for your 10-year JGB.
Yeah, let's take a look at the broad markets as well, because I think what's been interesting over the last, say, even 45 minutes or so, we've started to see a sense of stabilization taking hold. So, yes, you're still in the red, but you're definitely off the lows of the day this morning. So you take a look at the broader index, you're down 0.2%. The dollar as well is sort of stabilized, and you're actually seeing the IT index. I'm not going to say it's higher, but it's flat, and that's definitely an improvement from where we started the morning. So it seems like the trends that we saw in the US session overnight, we had not just the Amazon earnings in after hours that led to a huge slump in the stock and concerns around CapEx. You had another product update essentially from Anthropic that really hit some of the financial services companies that are listed as well. That seems to be just cooling down a little bit, that narrative, because we are, as I said, starting to sort of stabilize in the morning session so far. It is an interesting moment as well for companies that are making their trading debut, and there's a few of them. Of course, Hong Kong, it's a very busy IPO pipeline, but we do have a number of companies listing today. So let's take a look at how those are performing so far. Muyuan Foods, we had an exclusive interview earlier with the CFO of that company, but essentially the world's biggest pork producer is one of those companies listing. The clear standout, though, you can see is Distinct Healthcare here today, which earlier listed, and you're seeing that stock as well, surging 30% at the open. So let's get more on this company now and bring in for another exclusive interview. This is Philip Wang. He's the founder and CEO of the company. Thanks so much for joining us in the studio, and congratulations again on that trading debut. But let's just talk first about the company itself, so our viewers understand, because you are sort of have this goal to be the Costco of healthcare. But what does that mean exactly?
Yeah, first, thanks for having me. What the insights we get from Costco's business model is really our clinic is relatively big, 5,000 square meters. Secondly, we carefully choose what services we provide. We do a lot of services, but we don't do everything. Third, the quality of each service we provide must be good. Fourth, the price have to be right for the value. So this is what we got from the Costco's business model. Of course, we are in a different industry.
Private healthcare in China, it's been facing some pretty challenging sort of headwinds, I guess you'd say, over the past few years. A lot of your peers have actually faded out. What is the sort of market demand that you're seeing now?
I think in China, the national medical insurance is tightening its spending. So it impacts many our peers who receive revenue from national insurance. But for us, we are a health consumption story. People pay us from out-of-pocket cash, or we get 10% from a commercial insurance company. So that distinguishes us from many of our peers.
What also distinguishes you from peers as well is some of the expansion that you've done into Singapore, into Malaysia, for instance. Talk us through, I guess, further plans around that, and also just how you're planning to use the IPO proceeds.
Yeah. As many Chinese companies are going overseas, we'd like to cautiously expand overseas so we can serve those Chinese employees locally when they have medical needs. The other side of the story is really we see more and more foreigners, including, more foreigners and particularly some Hong Kongers are coming to mainland China for good services at great price, I would say. So with expanding overseas, we have kind of brand awareness and some kind of familiarity for those foreigners who come into China for medical services.
Yeah, I mean, your clinics are right along the border, I believe, in Shenzhen. So
exactly.
Yeah, you're taking
and Futian. Yeah.
So are you interested in doing this whole medical tourism then, right? Bringing patients to your clinics in China? Is that something that you're looking at?
We do some kind of trend. It's just started. We'll wait and see whether this could be a main component of revenue or it's just a phenomenal thing. Yeah.
So I understand there's that two-way street. You want to expand so you can also increase traffic back into clinics, possibly in China. But in the overseas postings or places, where are you looking at beyond, say, Singapore and Malaysia? Do you have other markets that you're targeting?
Yes, we do. We're going to open our first multi-specialty clinic in Dubai this year.
Oh, okay.
Yeah. We'll start from there and see how it works out. Yeah.
Why target these overseas markets, right? Tell us a little bit more about Singapore, Malaysia, Dubai.
What we can see is really more and more foreigners actually come to China for tourism or for business. Probably the component, less probably from, to my understanding, is from the traditional Western countries, but many are actually from Southeast Asia, from Middle East Africa. So our footprint is really where the Chinese company go and where the foreigners are coming to China.
Let's talk about AI as well, because I think we've seen huge disruptions this week to some models, particularly, for instance, in the legal sector. We saw it in the financial sector overnight, and Anthropic as a company is being clear that it wants to target healthcare as among the industries that they plan to really focus on, essentially. But how are you integrating AI, and what's the role that you see as well for your business?
We start to benefit significantly from the development of AI technology, in particular large language models. So based on the large language models, we build AI applications that could really help us in two aspects. First is to improve operation efficiency. Like we have many, over 50 AI applications like appointment confirmation, like billing settlement, like staff scheduling, things like that, which were used to be done by human assistants. Many of the tasks done by human assistants, by human nurses, and even human doctors. Those tasks can be done by AI now. So you can see our labor costs as percentage of revenue was down 5 percentage points over the last 2 years. Second, AI could help us to provide unique user experiences, which is what we just started to roll out this year. We could give users like flexibility to manage the schedule. For example, they can ask our AI agent, when is my next flu shot? Okay, those queries you cannot go to Doubao or GPT because they don't have personalized information of that. So things like that will help us really to provide unique user experience in today's era.
And you're backed by Tencent too. So you've been able to kind of use the Tencent Cloud AI and the like in your operations. Tell us, what about diagnosis? How does AI help in that?
First of all, we benefit greatly for being within the Tencent's ecosystem. So we use enterprise WeChat to serve our users. Users can make appointments, teleconsultation or mini programs. We leverage Tencent's cloud AI capabilities. We even have partnership with several AI technology companies invested by Tencent. So we are very grateful to have a substantial shareholder like Tencent. Okay. So in terms of diagnosis, I think it's probably technology companies' job. It's as the healthcare company, we more focusing on leveraging the technologies to improve efficiency and offer unique user experience.
Philip, it's great to have you. Thank you so much for talking to us. Philip Wang there, founder and CEO of Distinct Healthcare. We're still checking Indonesia assets here this morning on the back of that Moody's warning, of course, and downgrading the outlook for the economy to negative. So there you go. We are continuing to see yields picking up and bonds selling off here this morning on the back of that warning. So this on the back of what we saw with MSCI just a few days ago certainly is becoming a double whammy for Indonesia. We also are seeing stocks fall once again, too.
Yeah, just lots of concerns about policy uncertainty and potentially weakening governance as well in the country. But we'll leave that there. If you are a subscriber and you want to rewatch our recent interviews, you can via our interactive TV function. So do check it out at TV Go. More ahead. This is Bloomberg. President Trump says he'll host Japanese Prime Minister Takaichi at the White House next month. He's also endorsed her coalition in elections scheduled for Sunday and called the US-Japan trade agreement struck last year one that benefits both countries. And sticking with those elections, polls are suggesting that Takaichi's coalition is set to expand its slim majority on Sunday. That's even after her pledge to cut sales taxes spooked investors.
国民の皆様、私は本日内閣総理大臣として
Just 3 months into the job, Prime Minister Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th. 衆議院を解散する. Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years, while wages lag and a weak yen pushes up import cost, giving a sense of falling living standards. To ease the pressure, Takaichi pledged to suspend the 8% sales tax on food for 2 years.
Maybe it's because of the weather, but the price of vegetables, some are just shocking, aren't they? Even things like snacks and chocolate, their prices haven't doubled yet, but they've suddenly gone up quite a bit. Same with rice.
I wish they stopped just talking about tax cuts or eliminating the consumption tax during the election season and actually put realistic measures into practice.
The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Even before ballots are cast, markets are reacting. The yen has wavered and the government bond yields have risen, reflecting investor unease over Japan's fiscal path.
Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not talking about expansionary fiscal policies. And this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
Japanese stocks have already outperformed many of their peers as investors focus on the so-called Takaichi trade. Ariel Buzetto, Bloomberg, Tokyo.
All right, and let's bring in Garod Reddy now, our opinion columnist. And it was interesting. You think we should be ready for something called Takaichi derangement syndrome? Tell us a bit more what that means.
Well, it's a little bit of a play on Trump derangement syndrome, which is a phrase that's been going around since Donald Trump first became president back in 2016. And it describes, I'm not trying to draw a comparison between the two leaders because they're very different people. President Trump breaks a lot of norms. You would never see Takaichi, I think, endorse a candidate in a foreign election as President Trump did today when he endorsed Takaichi. But there is a similarity in how they can enrage their opponents. And I think we're already seeing that a little bit with Takaichi over the last couple of months. She has a real presence in a way that many Japanese leaders do not. And she really tends to drag the news cycle into her. We've already seen this with the reaction from Beijing over her comments on Taiwan. That's fallen off the news cycle a little bit, but you can expect it to come back if Takaichi has a resounding win on Sunday. We've also seen it with the markets, as the piece just before I came on showed. Markets overreacting, I think, to her spending plans, assuming that she's some sort of free spending, spendocrat, when really her spending is very much in line with her predecessors, who were often considered to be fiscally conservative. So I'm suggesting that people need to read in between the lines a little bit and not react to every headline, not react to every comment that she makes.
If, though, Takaichi does manage to expand the slim majority she has, as the polls are suggesting, where do you think she goes and how do you think she uses this new expanded mandate?
It's a good question because she is almost certainly, based on the polls and Japanese polling, I should say, has a pretty good record over the last couple of years, even though in other regions it hasn't been so good. So we can assume that she's definitely going to have a stable majority that she'll be able to push through proposals. Having said that, the election campaign has been pretty light on actual policy suggestions. Even the suggestion of cutting the sales tax on food, Takaichi has, to my knowledge, hasn't mentioned that at all on the campaign trail, and I wouldn't be surprised to see that policy disappear entirely. What I think we can assume is that she will have a mandate to lead, and she may start talking about more proposals such as sales tax, such as potentially constitutional reform, which is one thing that she has brought up on the election campaign, and maybe trying to enact some more expansive policies, not fiscally expansive, but I mean broad in the scope of vision, in terms of she has a lot of areas that she wants Japan to concentrate on, Japanese industry to concentrate on, such as AI, quantum computing, energy, these kind of areas. We can assume we will see more of that. We haven't seen much of that from Takaichi so far because she's been concentrating on passing last year's extra budget, and then as soon as we started, this year, she's immediately been into election campaign mode.
All right, Garod, thanks very much for joining us this morning. A great opinion piece as well, titled Get Ready for the Takaichi Derangement Syndrome. Let's shift to another election now, because Thailand is heading into its third vote in 7 years this weekend. Let's get to Bangkok, where our Bloomberg Inside anchor Haslinda Amin is standing by. So, Has, just explain the significance of this election.
Well, Belle, this is yet another opportunity for Thailand to reset its economy after 20 years of political uncertainty. Remember, we have been here before. You said this is the third election in 7 years. We've seen 3 prime ministers in 3 years, and only one government has successfully completed a full 4-year term. So it's been a revolving door. It's been so difficult to ensure political stability. And yet here we are at another crossroads, at another juncture, at a another election. A lot of hopes pinned on this election, but if you're hopeful, you may want to be a bit more measured, because opinions out there are that we'll see yet another hung parliament. Not a single political party is expected to win a majority of the seats to form a government. Expect a lot of political wrangling, a lot of horse trading. Expect a coalition government that will fail yet again to push through structural reforms needed by the country, needed by the economy. So it's almost that we feel like it is back to square one for this particular country. As I said, investors have been pretty much up in arms, sitting on their hands, not wanting to invest in the country. If you take a look at how Thai stocks have done, they were among the worst performers in the world. They are waiting for clarity, and hopefully this election will provide just that.
Yeah, tell us a bit more about how campaigning has been, but what have been sort of the policy platforms for the political parties?
Well, for a start, Yvonne, I mean, this election is more about the economy, less about the politics. And you can feel it as you walk in the streets of Bangkok. People are pretty downbeat because they've had to grapple with a high cost of living and businesses which aren't doing well, and also stimulus which isn't really translating to growth in the country. So it is about the economy. It is less about politics. And we're seeing that in the form of what's being promised during the campaigns here in Bangkok and elsewhere in the country. We have political parties promising handouts, cash handouts, subsidies, and we had Pheu Thai Party in particular, in fact, dangling 1 million baht for 9 people every day to ensure that they can counter the high cost of living. Whether or not that is sound economics remains to be seen. This is one economy that needs money to be channeled thoughtfully in AI sectors, in the education system that will help produce skilled labor to meet the demands of the future. So that's been dangled, and 2 political parties in particular come to mind. One is Bumjai Thai Party, which is headed by incumbent Prime Minister Anutin. He's, of course, a very popular figure. He was a health minister during COVID, and he's been the kingmaker for the past 20 years. And the other party, of course, is the People's Party, young, progressive, pushing for reforms that people want to see but have not been able to be translated in reality.
All right, Has. Thank you, Has there, our Bloomberg Inside anchor, joining us live from Bangkok ahead of that election. And for more, of course, on Thailand, stay tuned to our interviews in the next hour with Has. We've got analysis from the Dean of the Faculty of Social Sciences and Humanities at Mahidol University. We're also speaking with the head of Thai Chips from Hana Microelectronics. This is Bloomberg.
Right, taking a look at how markets are faring this morning, and we're actually seeing some sentiment. It is improving. It's off the lows of the day. Of course, it's still in negative territory, but doing much better than when we started the session. So you've got the likes of SK Hynix, Samsung, for instance. They were earlier down as much as 5%, now around 1.5% in the red. So that's the chip story there. We can leave that one. But let's just take a look at how the Kospi is faring intraday as well, because we have been on track for the first weekly loss of 2026, still probably setting up that direction. But again, it is sort of stabilizing somewhat.
Who would have thought talking about 1% declines is stabilizing when it comes to markets here these days? That's just how volatile things have been. But we're checking when it comes to Bitcoin, even stabilization there as well. So at least there's some green crossing there when it comes to Bitcoin. We're back above that 64,000 level. Interesting take, contrarian one from JPMorgan, saying, in terms of Bitcoin, more attractive than gold over the long term. You talk about the upside potential here against gold's defensive appeal. That's it for us here on The China Show. Have a great weekend.